Next week, S&P 500 may experience minor pullbacks early in the week as global markets respond to evolving trade rhetoric. These fluctuations reflect investor caution as they evaluate the potential for policy follow-through. Meanwhile, the Nasdaq 100 is expected to show resilience, bolstered by renewed momentum in artificial intelligence-related equities. This rotation into tech, particularly AI infrastructure, is becoming more defined as investors recalibrate their strategies. The volatility index, VIX, is likely to spike briefly on Monday, a reaction to headline-driven uncertainty, but is expected to stabilize by midweek. Oil markets remain range-bound near key psychological levels, with slight upward pressure attributed to discussions around supply management and concerns over maritime logistics. In contrast, gold is likely to rise modestly as investors look to rebalance portfolios and seek stability in the face of broader market churn. Currency markets are also showing movement. The euro continues to weaken against the US dollar, driven by a combination of export tension concerns and signs of slowing industrial output in the Eurozone. Overall, market sentiment is expected to stabilize by Wednesday, with a likely pivot back into growth-oriented sectors as end-of-month rebalancing strategies take hold. Sector highlights and investment rotation. Based on the latest macroeconomic signals, 3 key sectors stand out next week. First is artificial intelligence infrastructure. There is a marked increase in institutional interest in companies delivering chipsets, software tools, and high-performance server capacity for AI applications. Leading firms in this space continue to attract significant capital, especially those that have announced new enterprise contracts or expansion into critical data infrastructure. Second, we turn to biotech and healthcare. These sectors are drawing fresh attention, not just for their defensive characteristics in uncertain times, but for strong fundamentals and promising pipelines. Investor optimism is growing ahead of the summer cycle, and firms with limited international exposure are positioned to benefit from reduced susceptibility to trade disruptions. Lastly, defense and aerospace, particularly those focused on domestic procurement, are gaining traction. As geopolitical tensions and trade rhetoric escalate, companies aligned with North American defense strategies and national procurement policies are becoming more attractive to long-term capital. Top equity picks for next week. Several companies are showing upward momentum driven by a mix of institutional positioning and sector-specific catalysts. Supermicrocomputer, SMCI, is benefiting from robust data center growth and increasing domestic demand. Palantir Technologies, PLTR, continues to gain traction through public sector AI initiatives and steady enterprise adoption. Eli Lilly, LLY, is seeing rising investor interest as the healthcare sector rotates back into favor, supported by a strong pharmaceutical pipeline and insulation from international trade risks. Nvidia, NVDA, despite already being a heavily traded name, maintains strong support among investors due to its dominant role in AI acceleration. And Vertex Pharmaceuticals, VRTX, is demonstrating strength on the back of solid earnings performance and optimism around its therapeutic pipeline. Key risk management moves. For those with exposure to globally dependent industries, a cautious approach may be warranted. Tesla, TSLA, faces potential vulnerability due to its significant operational footprint in Europe and its reliance on international manufacturing chains. John Deere, DE, similarly, is exposed to European agricultural market dynamics and foreign exchange risk, making it a candidate for portfolio trimming. While Meta remains fundamentally strong, sentiment around the stock appears to be shifting, with signs of rotation into other narratives. Meanwhile, investors holding European industrial and luxury stocks should remain alert. Any further escalation in trade-related rhetoric could place additional pressure on these sectors, prompting reconsideration of exposure. Final thoughts. This week underscores just how quickly macro narratives can shift market leadership. Disclaimer. This analysis is for informational purposes only and does not constitute financial or investment advice. Investing in stocks involves risk, and past performance is not indicative of future results. Always consult a certified financial advisor before making any investment decisions.